Hello and welcome to Forex Films. It is April 17th, 2011. We're going to be taking a look at the US dollar long-term outlook. We'll be looking at the US dollar looking for a major bottom, and we will see that US dollar is likely to move sharply upward in the coming months. First, we're going to look at this technically. You see a chart here. If you're familiar with Elliott wave theory, first thing that should pop out to you is a 1, 2, 3, 4, 5, almost this whole 10-year period is a large impulse downward. And anyone involved with technical analysis should see right away that this is a very small correction for that large of a movement downward. We really have three possibilities here. One, this is a correction and we'll go down lower. Two, this is a reversal and we're moving higher. And three, which is somewhat in the same category as number one, what's slightly different is that this is a correction and we're going to move higher from here before we again resume the downtrend. Now, if you look at the news media and mainstream thinking, there's no way this could move upward. We've only got to go down because of Helicopter Ben and the Fed relentless quantitative easing. But I will show you that that does not mean anything, and we really just have to go up. Here we've got our Elliott labels on the short-term chart. This is only relatively short-term. It's still 3 years of data, 1-day candles. You can see over here we have 1, 2, 3, 4, 5. Then we have a correction underway, A, B, C. So, where will C end? I believe it will be somewhere about 73. And you can apply this to all dollar-based pairs except for dollar Swiss and dollar yen, which you'll understand that if you're familiar with currency trading. Now, what I've done here is looked at price levels and done some analysis to determine exactly where this will probably end. So, some Elliott wave analysts believe this was the top of the fifth wave, but really when you look at the smaller wave structure, this could easily all be one third wave in here, and then this will be 4 and 5 as I labeled in the previous chart. So anyway, I'm looking, and this is only 19 points difference anyway, but if you go from the bottom 71.04 to 89.62, then really you got 89.62 to 74.18 to the bottom of the first leg of the correction, or the A wave, and then top of the B wave is just under the top of wave 5, so 100 points lower, and at equality it'd be 100 points lower than the bottom of the A wave, so 73.18. And when we look at the resistance over here, you'll see resistance from the top of wave 1 puts us in 73 to 74 range anyway. Here we go down shorter to the only viewing wave C. So we have this first leg down of wave C. This is actually looks to be a double 3. So 1, 2, 3, 1, 2, 3, 1, 2, 3, and then this will also turn out to be a 3-wave movement. But since this move down was so drastic and it didn't result in a reversal, if we look for equality from this, this will actually put us under the origin of wave 1, and we can't have that happen. So I'm looking for 61.8%, which also puts us in that 73 to 74 range. And honestly, I believe it'll be in the lower 73s. This is in the lower 73s also, 73.39. Here we have our resistance lines. You can see if you include all the data, which I really think you have to have an honest assessment, these two lines, you can actually see the dollar is currently closer to the upper channel than the lower channel. So even in the short term, we can see a lot of downward movement. Fundamentals, actually, before we go to fundamentals, I'm going to go back a little bit. Here was the first chart, the 10-year. If you go back further in the data, you can see that this looks like a 3-wave movement, or it could be the end of some really long cycle. But anyway, just to correct these, it will be a massive correction. So what are other opinions? Other opinions are this is a triangle. So a triangle is always a B wave or a fourth wave. Now if you go back in time from here, you'll see impulse down, correction, impulse down. And that's the most data that we have on record. So that can't be a B wave. And it doesn't fit for being a fourth wave because of what I showed you here, 1, 2, 3, 4, 5. But even if it was a fourth wave, let's say A, B, C, D, we're going to go sharply higher, above 85, before we come crashing back down again. Now, it just doesn't have the right look and feel for a triangle, though triangles a lot of times have a lot of different shapes. So you don't always need to be concerned about look and feel, but it just doesn't meet my expectations at the moment. But even if that is the case, it's going higher quickly from here. Or rather, in the near future. Now, if this is a first and second wave, like I'm telling you, third waves are usually the most momentous and the largest waves in a movement. So once this hits 73, it'll move up faster than this and probably farther than that. So if you can hit that wave all the way up, just keep riding the trend, it'll greatly benefit you. Now if this is A, B, C for a correction of this impulse down, you would expect at least 0.16, so it's headed upward even in that case. Really, I don't see any idea that has any likelihood that would result in the dollar going down from here. And I know nobody's going to be trading just the dollar, but this is the dollar index heavily weighted towards the euro. This very same data can help you trade the euro almost exactly, and say you're trading the Australian dollar, which doesn't look anything like this. You keep trading the Australian dollar long until the US dollar index hits that point, and then you switch your trade to short, and you'll be good from there. This really helps you with any dollar pair. So, let's go to some fundamentals. What are the fundamentals that make this outlook seem plausible? We have the Europe sovereign debt crisis. Portugal is calling for a bailout. Spain next? I don't really know, but it likely could be. But even without Spain needing a bailout, we've got Greece and Ireland that both look like they're going to go bankrupt even after their bailouts. So the European Union is not going to be in good shape for a long, long time. And the United States, it hasn't been in the news for a while, and really politicians think it's going to go away because of the economy getting better. And that's really not United States federal government debt, but the states themselves, their individual debts. There's states like California that are probably going to go bankrupt. When we hit that next leg of the recession, there probably will be states that go bankrupt. Going back to the European sovereign debt crisis, if you look back in history, it's not all that uncommon for a country to go bankrupt. Like, before studying Forex, I never really had that thought even enter my mind, but it has happened on many, many, many occasions. In Japan, we have this huge tsunami, earthquake, nuclear disaster. It's going to be many, 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 many years before they recover, and they were already in such bad shape from the earthquake in 1995 and their long-term depression. It's not going to get better for them for a long time, and therefore Asia is not going to get better for a long time. And high unemployment. This is talking about the US. US unemployment, even though it's gotten better, still 8.8%. It's very, very high. And if this is the good times, then when we slip back a little bit, what are the bad times going to look like? It's going to be very, very ugly. We have had a very long extended bull market and tons of optimism. Markets are overextended. Once it starts going the other way, everybody's going to suddenly remember all the bad things that are going on, and it's going to be way worse than 2008, 2009. If you have any comments or questions, please comment this video and email me at forexfilms@gmail.com. Thanks for listening, thanks for staying for the whole thing, and I will look forward to your comments. Thanks. Bye.